a lot of people may not realize it, but we have a ton of training materials on the website. So we do have an area, a self-paced training area. Feel free to peruse there. If you have questions on anything, there is a help desk ticket and we're always around to help out. And then if you want to speak to me, there's a form on the website where you can set up an appointment. And that's for people who are new to Sceeto, don't know Sceeto, your existing customer, you want to talk to me, just fill out the form on the website. We do our best to try to meet everybody's timetable, and I'd love to talk to you. Next week's webinar, this is very cool, and we're going to touch on this today, is what we're now calling the Universal Levels Method. And that's very important. I'm using this term universal because I believe that this methodology works universally, and that's super cool. And it's all about trading levels. I know a lot of people trade levels. I trade with Billy a lot. He trades levels, and I believe that we have at least a draft document of a universal levels method, and we'll touch on that today. How do you trade any level? And I mean that like any level. How do you trade any level? Basically, it's broken down into 4 buckets. I'm going to pivot over to that very quickly because we are going to touch on that today. We all know what levels are, and for the purpose of this conversation, levels are anything that's going to have a horizontal line drawn on it. We're going to keep it very simple for levels, and that would be here. Here is a chart of the 14-tick range bar. Everything that's red is resistance. Once it stops plotting, it means because it got breached. Everything that's a green line is support. Pretty straightforward. When price comes to a level, we have a methodology, or I think we have a methodology that can say, oh, I know how it's going to play out at this level in real time to give me a heads up. And then basically what's going to happen at a level. You're going to have an expectation of a reversal, or you're going to have an expectation of a breakout. And that breakout is either going to have acceleration, and what does that mean? You had a top, the breakout, and then acceleration, no real pullback, or you have an expectation of a breakout, then a test. And that would be something like the breakout and then the test. Or there's an expectation of a fake out, breakout. And what is that? That would be like we saw some sort of breakout up here and then turns around, fake out, breakout. So I think that next week we want to spend a lot of time on that because I've come to believe is that at any level, if you're looking at order flow and you're looking at the right stuff, it'll be very consistent. And it makes a lot of sense because the order flow is going to determine what's happening at price. So if we have a handle on what order flow is doing at a level, we have a good handle of what's doing on price. So for instance, you'll have an expectation of reversal if at the level, order flow diminishes and decrements, it decelerates. So when I say at the level and decelerates, I mean price is coming down, 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 and order flow is decelerating. We could chew up a whole webinar on this, so I don't want to go into next week so much, but if you find this kind of stuff interesting, this is what we're going to do next week. We're going to spend a lot of time at a granular approach on the expectation of a reversal, what the order flow looks like, what the early entry conditions are, how to jump in early, and then how to manage that, and then what your normal entry conditions are and how to manage that. We're going to talk about the expectation of the breakout, and then what in the order flow specifically is going to tell you that you're going to have price acceleration. We're going to actually spend time on this today. This is where we're going to spend some time. It's going to be fascinating, absolutely, it's going to be unbelievable. Then we'll also talk about the test and then the fake out. So that's next week. If you want to sign up for next week's webinar, I'm really pumped for that already. So today, this is what we're going to cover, or as much as possible, and I'll highlight some of the things. We're going to start bringing this into the conversation, the Gambit methodology. Super important concept and something that I use intuitively, and now that I'm trading with some other guys, we've been able to articulate. And it's essentially, am I getting in early or am I not? I think anybody knows me knows I get in a little late for people. I'll kind of wait. I'm a little bit like the last guy to show up, but my trading philosophy is the train's already pulled out of the station. It's okay to come in late. A lot of people enter early, and I don't know if that's good or bad, but I think we have a very good Gambit methodology on how to enter early or what the expectations are. And it's simply, if you have your perfect setup, everything is wonderful, go for it. But once you go for it, order flow, concomitant order flow in the direction of your position which means buying order flow if you're long or selling order flow if you're short, should come on immediately. And I mean 20, 30, 40 seconds right after your entry. If not, cut the losses. And we'll look at this specifically over and over again today. Pressure points, this is what we're going to spend most of the time on today. Known areas of vulnerability. Also the ideal, you can think of it as the ideal trade location. I think a lot of people know me. I trade the right shoulder. We're going to talk about the breach with force and how MacDaddy comes into it. This is how we're going to tie a bow on this today with MacDaddy right in here. So let me color code. This is what we're going to go into in detail with MacDaddy. We're going to be talking continually about how price responds to order flow. I think everybody's familiar with this. This is an upside down head and shoulders, right? A low, a retracement, a lower low, a pullback, a higher low, and then up. So this area, probably the most important area we're going to talk about today. We're going to spend time here. We're going to look at order flow in detail. We're going to look at order flow, MacDaddy, when it comes up through here, and then right at this point here. This is the money shot. I just love this because it's so consistent, and we're going to be just looking at a bunch of charts. So let's start looking at some tape. This chart that you're looking at is a 4-tick E-mini S&P 500 chart in Ninja Trader. This chart over here is in Sierra chart. We're going to pivot back and forth a little bit today. Let me just bring up the Sierra chart. This is very similar in Sierra chart, right? Price, wind, MacDaddy, yellow dots. Price, MacDaddy, wind, green and red dots. And I put these green and red dots on for today. We talked about resumption last week. We'll get into that in detail. Now, I cherry picked some things beforehand. I went through, I think we have 50 days on this chart, and we've got a ton of examples. This one I didn't just particularly cherry pick, it's just one of a zillion. But here you have a low, a lower low, a higher low, right? So here we have a low, a lower low, a lower low, a higher low. That's what we're looking at. This is the lab where everything is pristine in PowerPoint. This is our reality. What we have here is this 6 area here that tees up our right shoulder. And what's important here is this level here. This is what I would call a breach point. And we talk about a breach point in an area of vulnerability, and we're very specific about that. And then we want to know when price revisits this area, does the order flow mean it, like it's going to breach it with force, or it's not? What's important about this area is that this particular setup, if you know Elliott wave, I think it's 1, 2, and 3. 3 is the money shot. That's your longest, straightest wave. So as traders, we want to find, when am I going to have contiguous bars? When is price just going to go with me in a straight line? And then that's the easiest, happiest, most wonderful place. So if you have the patience and the wherewithal to wait for this to set up, then you have to wait for the breach point. So the breach point specifically, and we're going to go through a lot of tick precise numbers today, just so everybody's comfortable. Here's my low. Moves up, the high makes a lower low. On the close of this bar, which is at 10:30 and 8 seconds, the high tick is 283.75, and I'm getting those numbers from the crosshairs flush over here to the right if you want to follow along. Since this is a range bar, the open of the next bar is generally, particularly in the ES, 1 tick away, and it's at 2084. Okay, so once I'm here, I want to look back in time and look for my breach point. And that's simply the most recent pivot here. So here's my breach point. It's known. It's 20825. We have wonderful formation, a pretty good formation. We have price revisits 2085. What happened just beforehand? We've got, let's look at MacDaddy. And this is what really matters. This is a MacDaddy webinar. MacDaddy, very high. Goes down, not much of a pullback, -1, -10, not so much. The low bar, where the pivot closed, back to the -2 zone. That's not a lot of selling. That's a good right shoulder. We have a lot of other order flow algorithms that we could surface, but I think last week people's heads exploded with the messy chart. There are certain things you'd want to see around here. Wouldn't it be great if you saw a high frequency trading sell surge here and then the bar closed up? Or another tick ratio here, or some sort of Bollinger, like we use an engulfing bar over here, or this was the lower Bollinger. The more concomitant information you have the better. But for now, we're going to keep our charts very clean just to keep it simple. Bar closes up at 83.75. Could be a good right shoulder, may not, who knows. It's 10:30 and 8 seconds. I think next bar, 10:30 and 28 seconds. So this is 20 seconds later, I think it closes. I think this is the close of the bar. Ninja and Sierra do it differently. One is the price is the open of the bar, one is the price of the close of the bar. All of a sudden, MacDaddy goes through the roof to 26. So it's approaching what I know is my breach point. That's a good sign. We talked earlier about entering early or late. Some people are going to buy here. Geez, it's going, it's going to breach. Some people want to wait for the breakout, right? We know a hard tick number. It's 2085 and a quarter. That's what I like about this is that these are hard numbers. It's not nebulous. It's not amorphous. It may be this. It may be that. It's 2085 and a quarter. Let's see what happens. The next bar opens up at 10:32.16 at 2085, one tick below. Goes up one tick, or at some point goes down, right? Maybe there's a 4-tick range bars, but does pull back to 2084 and a quarter, closes at the high. There's a tick ratio down here. If anybody's not familiar with that, this tick ratio looks at basically for everything that's happening on this bar, or actually what's happening a bar that we create in Chicago, it's looking at the up-down tick ratio, and it's saying for this time of day, for this size bar, do I see material up or down ticks? If it's a dot below here, we have large dots and small dots. I set this chart up just to show large dots. That means it's greater than 2 standard deviations. So in terms of your bell curve distribution, if it's below, we have an uptick ratio that's greater than 2 standard deviations of your distribution. How price responds to order flow, example, the tick ratio is what matters. So what do we mean by that? You can have all sorts of stuff happen in the order book, but what's matter is how does price respond? And that's what we're always doing as tape readers. We're reading the tape and referring, this happened in order flow, and this is how price responded. Oh, that's my tell. So when we say you have a tell, like a poker face, a tell, that's what we mean. How did price respond to tape? So you had an uptick ratio, the bar closed at the high. MacDaddy pulled down a little bit, but still demonstrable. I would not say this is a material decrement. I mean, there's a lot of stuff going on. You had this pocket down, blah, blah, blah. They're still buying. Here's your breach point. Trades at 0550, went up, went down. If you entered on market here, and this is where we're making the distinction of entering market or limit order. Let's say you took it, say, oh, this thing closed up. I got the tick ratio. I filled at 05 and a quarter. Maybe you filled up here. On the close of this bar, it closed down. We have a new bar here. Uh-oh, price didn't go straight up. But let's look at the tell. Let's look at the tape. What's important? I know MacDaddy pulled back, but hey, we're still at 15. In terms of the rate of change of order flow, that's still pretty good. Now this bar, we talked about an engulfing bar. Here's your engulfing bar. If you miss this with the MacDaddy close up, you should be off to the races at this point. Let's talk about engulfing bars and why they're so important. And I think it's important for us to do like bar by bar analysis, because when you're trading, every bar matters. Whenever you have a thin body bar, that's a candidate for an engulfing bar. On the close of this bar, I either have a doji and I have a reversal, or I have a candidate for an engulfing bar. I don't know yet, but that's very important on the breakout. Like this is where everybody's paying attention. What's going on? So let's think about what's happening in the order book here. So if you're looking at the dome, what happens? Sometimes you get fatigued, you're not looking at the dome, but the candlestick chart's going to tell you what happened in the dome. Price went up, yay, price went down. That's pretty much a sweeping of the order book right there. Price went down, price went up. So just in this little area here, you had a flutter in the book and down. That's a tell. That's a material tell, and price is going to escalate. And then here, you have your straight move shot. And let's just go back and visualize it here. This is the breach of 6, and this is where we expect easy trading. Easy trading. If price breached here and MacDaddy decremented or went red down here, we're going to have either a retest, like a retest, or we're going to have failure. And that's what we're going to work on next week. So let's just punch through a bunch of this, and we'll look at a ton of data. High, higher high, higher high, lower high. So this is the same thing in terms of the head and shoulders, but inverted. And I think I got a video of that here. This thing works all the time. There it is. So it's the high, the higher high, the lower high, and then here in your breach point. This works over and over again. This is probably the best exercise you can do. Just look at this, keep a simple chart. Lower high, my breach point is, I'm going to look back to the left, 89. A sell breach of 89 with force is my money shot where I expect to see acceleration. On the close of this bar, actually even on the open of this bar, I know that I have a pivot low. Here's my breach bar. If you'll notice, we do have the tick ratio. I tried to find examples where they have tick ratio and MacDaddy, because you have a down tick ratio in MacDaddy. MacDaddy is -45, and you have your straight line acceleration. 1, 2, 3, 4, 5 bars before you get engulfing. Then it follows through, but that's some pretty quick stuff. John's asking that once into the breach, how do you discern new aggressive trades coming in versus the stops getting hit? So John, all I do is I look at MacDaddy. So I look at the rate of change. So as long as this thing, you have this breach, as long as they're still in the selling down here, that's not stops getting hit, that's more continued selling. So this is my cheat sheet down here. And that's why we talked to like MacDaddy part 2. MacDaddy is your go-to indicator. Every bar is going to tell you really with high confidence of what's going on and which direction you should be at. So as long as it breaches and they continue to sell, you're good. If they breached and MacDaddy went right back up, then all bets are off in terms of the follow through. AJ's asking if MacDaddy is rate of change. It's our flavor, AJ, of rate of change. Yeah, and maybe not everybody was on the call last week. We should talk about like what is MacDaddy. So it has nothing to do with MACD. Now MACD is moving average convergence divergence, right? So do your moving averages get away from each other, or are they coming back to each other? MacDaddy is the rate of change, and how we measure rate of change is kind of a little complex in some areas, but not so complex. But what's important is if you think of the rate of change of order flow coming into the Globex server in Chicago, if there is a breach and the rate of change continues to the sell side and stays to the sell side, price should follow. Because if all changes of price are changes in supply and demand, and in the electronic markets, all supply and demand or changes in price are managed via order flow, that rate of change is going to tell you so much about where price should go. And the reason that we tie up with these 4-tick range bar charts is we can see as price changes, we can then very easily align to the tick where the rate of change occurred. And then that's our tell. That's it in a nutshell. Price is going every 1 point in price. I want to know what the rate of change of order flow on the Globex servers are in Chicago, and I'm going to marry up my trading orientation, tied into that. Scott's asking about order flow versus trade flow and ticks. So what we do is we look at orders coming into the book, orders getting pulled for the book, which is not as important as it used to be, how orders are filling, and then with the filling, how they're coming back in. So orders that are near price and orders that are not near price, and then how they're filling and executing. And then in there, we have some metrics that we've defined as like our calibration or our measurement of rate and change. And then we have some algorithms on top of it to visualize it, to make it interpreted so it aligns easily with the range bars. And that's kind of what we do. And it's tried and true. This stuff works day in and day out. That's why I'm so hot for it. So let's just continue to look at some examples, because I think if you look at a dozen of these, you'll say, oh, that was the same thing. Here's a low at 2042 and a quarter, 2039 and a half, another low, 2038, another low at 2036 and a quarter. What's interesting here is you'll notice as price peels off, as it's moving down, wind has stayed big here. Here it pulls back, which is a good tell. Right at the bottom, after your first bar, MacDaddy comes up. This is my pivot, my first higher low. So then I look back, where's my most recent resistance? This is my breach point of 2930. What do I want to see? I want to see this thing breach with force. Here's your tick ratio, up, down, the MacDaddy comes in, and you've got your follow through. And then of course it goes on, but not as straight, not ideal, but still super tradable, super easy. So even if you got down here, and you can notice a lot of these trades, when you're trading the right shoulder here, either your first lower high, or you're trading this right shoulder here and up here, you shouldn't take a lot of heat on it. So I see a couple people have answered. Some people are saying 3 points, 6 ticks, 2.75 points. So let's just make a mental note. We'll try to say, like, how much heat do you take on these trades? When you have the perfect trade location and perfect order flow, you'll see that very tight stops are good. You're fine. You shouldn't get stopped out. If you do, great, got stopped out. If you don't, but you shouldn't take heat on these trades. And that's why I love this so much. I'm crazy for this. The trick is you got to wait for this whole thing to set up. Where's my lower low? Where's my low, higher low? Great, go. So it's a lot of like hurry up and wait, or wait, hurry up. Let's punch through a ton of examples. I want you to see boom, boom, boom. This is kind of an interesting one of note. Lower low, lower low, lower low, higher low, right? Where's my breach point here? The higher high, my breach point is 2049.50, came up. It did breach. Look at MacDaddy down here. My breach point was 32, and then it went contiguous up. Kind of lower highs, but higher high, lower high. Here's my breach point to the sell side, 2055.75. Here it breaches, not up, and then your engulfing bar. This is where we said the engulfing was so important with your tick ratio. And then negative 55, you'd expect follow through here. Low, low, lower low, lower low, lower low, lower low, higher low, right? So if I look back to my breach point, it's 200475. Tick ratio is like 40 something. I mean, tape meter, it appears pretty good. If you bought a market, this is a great example. This is, I forgot whose question it was before. This is fantastic, right? So went to 245, looks good. Decrementing, no big deal. Price went up. Decrementing again. MacDaddy's decrementing material. So you're going to get follow through as long as you have MacDaddy. If this MacDaddy was up here and this was up here, you'd have more follow through. So MacDaddy becomes your cheat sheet. Everything you need to know is in the tape here. So when they talk about reading the tape, this is your cheat sheet right here. Low, low, lower low, higher low. Here's your breach point. Doesn't matter. Here's a new breach point we could look at. Doesn't have to be this. You know, you got to have a little flexibility in there. Comes up. Tick ratio, breaches through. Pretty nice. What is this here? 49.60. It breached this. It's all, you know, one tick from each other, two ticks from each other. You're up. You should see buying in here. Should follow through, and it does. One lower low, two lower lows, higher low. Not great, but what you can see is really, if you look to your left and you'll see the MacDaddy accelerating through in the breach, you're going to see contiguous. As long as this is green, it's going to go up. If this drops, it's going to go down. Pretty straightforward. Let's just look at a bunch of examples. Here's one that didn't work. That's why I changed a different color. So let's look at an example where it didn't work because not everything's perfect. Higher high, kind of lower high, higher high, lower high engulfing. Looks good. Tick ratio, lots of selling. Looks good. Should follow through, right? That's not much of a follow through. Technically it followed through, but not much. Price went up, not too much. Price went down. MacDaddy's here. Here's your engulfing bar. MacDaddy continues to decrement or go to up. The next bar up. Here let's say you entered market at 21.75. You pretty much by the close of this bar, the open of this bar, you know, even by here, all bets are off. That's 72.75. So that's 4 ticks. So in terms of taking heat, I think some people were 3.6 ticks, whatever. It still keeps you in a very tight stop area. And you kind of know, wind pulled back. This is really not going up. You shouldn't have this kind of price action. So you eat the 4 ticks and you move on. So that's really cool to see that too. Higher high, lower high. My breach point is 73.75. This bar breaches with something, but then the follow through is on the next bar. You see, it doesn't have, since we use a 4-tick bar, not everything is perfect on a 4-tick bar, but you can see the selling come in right here, and you have the follow through. Go sideways and then another follow through. If this went green up here, I'd be getting worried, but it didn't. The tape will tell you. So we do have one comment that the trick is when reading the chart is live, everything is not so clear. So I think there's an exercise to make it very clear because I'm pretty comfortable with this. Like this is kind of like the go-to trade that I'm always looking for is one, to make it clear is to know that if you're in a downtrend to look for your first higher low. So if your mind is to start saying for these situations, let me have a forward-thinking ask, when is my first higher low? So your brain is already looking for the setup. It's a lot of times you may have to wait for it, but once you have your higher low, then your brain should be, where's my breach point? Then once you know your breach point, in real time, you have a lot of time to monitor and see if the breach is happening and is material. Higher lows put in. The close of this bar, you know that you have a pivot. Where's my breach point? Well, if it's going down, why aren't I looking for shorts? And you should be. And one of the great mental tricks is to be able to look both short and long simultaneously. So in this exercise, we're using a shorting opportunity, a long short layup to accentuate the money shot here. But that'll cost you because you may not be paying attention on the downside. Let's just keep going through these because we only have like 9 minutes left. And I wrote here double bottom as opposed to right shoulder, but super interesting. We got a low of 39.50, 38.25 low, low of 38, low of 36.50, double bottom. Some people could say that's a higher low or a double bottom, whatever. But even at the double bottom, you know your breach point is 37.75, and the buying comes in. The buying is magnificent, by the way. So that's why it takes off. I mean, when you see this kind of buying, price is going to respond. Reg mentioned the sequence on the 28th of March. If we'll go back, we'll get a chance to see that one. This is a cool one. This is a really cool one. And let's just make a note. It's not as, but you have one low, two lows, three lows, four lows. Cheap lows, right? Not the perfect, beautiful low we have here. Not this perfect, but that's a market reality. Here's my first higher low. It meets the letter of it. Does it meet the spirit of it? Yeah, I mean, like that's what's happening. You know, the lows get taken out, the higher low. People are starting to get trapped here. So this is my breach point. I'm just going to look back to the left. What's on my low? Look back to the left. What's my breach point? 204550, a known number. They buy it up. So if you see this, that's what's going to give you the straight up acceleration. If it breaches this without much, it's not going to go through. Oh, the beauty of tape. I love it. I just freaking love this. A little late, right? This is my first one. It came in a little late, the buying, but still good. And for this case, I'm using the tick ratio also for supporting evidence. You don't necessarily need the tick ratio, but it's pretty golden. So if you see that, you can lean into it more. And then I wrote here of interest because, again, it's not my first higher low, but you have the tick ratio and then the breach down and it's selling. It's going to continue through. So if you were buying this low, and I know people who do buy this low, don't. You know, this is it. Because people are like, oh, look, it's buying support. Like it's touching down, I want to buy support. They're not buying support here. And price is going to go through. High, lower highs, double top, higher high, lower high. Here's my breach point. I just, after my pivot, my first lower high is put in, what's my near-term support that's got to be breached? 207,750, taps through, breaches, and then down. My engulfing bar again. Ta-da! Look at that engulfing, right where you'd want it. Right? Here's a candidate. I know that this is a candidate for an engulfing bar. And then we have the spike in MacDaddy we talked about. I think maybe in last week's or next week's webinar. Certainly a bunch of other webinars. There's your classic spike in MacDaddy. Oh, straight down. This one I wrote here, right? Lower lows. Here's your higher low. It's kind of high. This 79.50 is kind of far up from 75.75. What is that? 4.25 points. Kind of high. But you see the buying came in, some follow through, but not really. There's a question before. Order flow didn't follow through, so it's really not going to go. This is the Gambit methodology. Once you enter, the expectation is that order flow must turn on immediately after your entry. It should turn on or stay on. That's all I care about. People say, what's your target? My target is predicated on like, well, how much juice comes in right after my entry. There are times where you catch the low and you're the rocket scientist. Oh, I'm the world's greatest trader. Look, you know, and maybe it's good, maybe it's not. But if the stuff comes in, it's going to go up. So here's the double. I thought that was of interest, so I put something around it, right? Downtrend, up, double top. Here's a breach point. Tick ratio, the selling coming in. Look at all that order flow. Here we go. Higher high, higher high, higher high, lower high. Look back. Where's my breach point? 2103. They sell it off. Pretty good MacDaddy. Goes down, sideways, and then a nice follow through here. Look at that. Look at that. Early in the morning, but this stuff works in the overnights very well. Now here's one that's really cool because it's not brilliant. Lower low, higher low with the tick ratio right on there, and the MacDaddy looks good. If you bought it, let's say you bought it at market at 97.75, went up, MacDaddy decrements here, so you're like, oh, maybe it won't follow through. Might get stopped out if you're not. Goes up, hey, maybe resuscitates, but MacDaddy decrements, so we don't expect to see the price follow through, maybe, but certainly not by now. Like whatever we saw here, no follow through at this point. This is 948, this is already 955. Tony's asking a question if MacDaddy works on tick bars instead of range bars. Tony, we spent a lot of time and energy building a distributable MacDaddy that will recalibrate automatically to any bar. And that's really cool. I lean into the 4 tick bars, but what we do for MacDaddy that's different from all the other algos that we distribute is, I think you know, like our data comes from the Sceeto cloud in Chicago and we push it down. And we do something with MacDaddy that's very different. For this, let's say yellow dot here, we push down one piece of data with a timestamp and says, oh, this is the price and this is the timestamp, put it over here. MacDaddy, we push down to your machine every second and we store it on your machine in these tiny little components, just like this core stuff. And then when you put MacDaddy in a chart, MacDaddy will look to what your chart is. It'll say, oh, I'm a 4 tick range bar chart, or I'm a 155 tick chart, or I'm a 3-minute chart. And it'll recalibrate itself to lay up on that chart so that it matches up that data set, that data series as well as possible. So absolutely, Tony, it does work on other charts. I'm just a freak for 4 tick because it works for me. Ben, thank you. So Ben has also said he's tried MacDaddy on every conceivable bar type and can honestly say that the 4 tick ranges are the most consistent for MacDaddy. Yeah, I feel that way too. Oh, Ben, and people who've been with us for a while, we're not going to have time to get into resumption today. We went into resumption last week. Last weekend, I built a faster flavor of MacDaddy for resumption into the trend, and it looks really cool. It didn't take too long either, but we built another, so we have MacDaddy Retail, and MacDaddy Institutional, and those are different flavors that do certain things, but we built a MacDaddy specifically for resumption. So if you can recall the resumption conversation from last week, which I'm sorry we won't get to today, which is this conversation. Hopefully in another week or two, we'll say, oh, we have a faster flavor of MacDaddy that's tuned for where I'm getting in, where a trend resumes, and that should be unbelievable. Mark's asking, looking at 2013, why not short for the lack of buying? You could. Mark, we're just trying to show is this one same setup over and over again to hammer it in, but you could. You have the higher highs, and then it's decrementing, and then the tail, and then ideally you'd want to see this win decrement here, but that doesn't always happen. So if you put the trade direction gauge on the back of this chart, Mark, I bet you'd have red up here, and you'd want to be in that zone. And also look at some other levels back here. Look at this, honey. Perfect. And one thing I like about this is that this setup is insanely consistent, and it's insanely consistent, I think, because you have a lot of market physics or market forces that just line up, and it's very easy to see. High, higher high, higher high, higher high, lower high. Look back to the left for my breach point, which is this pivot. It's 210,475. Sells through. Already here, already the dump in here at 950. Does pull back, but you're still not going to get your stop hit, and only selling here. Here we go again. At some point, you're going to say that's exactly the same setup, right? Higher high, higher high, higher high, higher high, lower high. What's my breach point? Look back, 2105.50. It breaches like it means it. I mean, like they sold it here, right? They sold it. That's all there is to it. Look at MacDaddy, minus 48. Oh my God, they're selling it. Plunk, don't be a buyer. So consistent, this setup. It's unbelievable. Low, this is straight down, higher low. First, this is a higher low with the yellow and the MacDaddy. They're buying it, right? And then here's where it looks like it should go straight up. Looks like it should go up. But here, look, it's still pulling down. Down, 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 and up. So this is your tell after the fact. MacDaddy's going to be your roadmap. Every bar after this is your cartography, your map. What's going on? Oh, here's one. Look at this. Let's see what happened, why it wasn't here. Perfect, right? Lower lows, my first higher low. This is still kind of like a decent higher low. I wouldn't say just because you had this, you're not longer the right shoulder. MacDaddy comes in. Let's say you buy here. It's going to go to the moon. Oh, we don't have the breach point. That's why I didn't have it. It didn't breach. There was no breach. It never met the breach point. And it didn't meet because there was no order flow follow through. Order flow is really a tell. I mean, that's why I look at it every bar. Okay. High at 89.75 or so, high at 91, high at 93.75, lower high, kind of all in the same here. This is kind of like a double, both at 93. Here's my new breach point at 91.50, and they're selling, and they continue to sell. Price is going to follow through. A little tuck in, and then resumption. This is your resumption bar. That's key. Lower low, lower low, lower low, higher low. What's my breach point? My breach point is 206.350, and they sub-buy it like they mean it. A little bit of a tuck, up. Plenty of money in that. And you'll see they sell it down and before they move it up again. And tape will tell you. That's where your moving average is not going to give you these kind of insights and these nuances. Moving average is not going to tell you this information. The tape will tell you this information. Here I put some numbers just so we can count it out. Low, lower low, lower low. Here's your higher low with the breach and up. Hopefully this setup should get boring at this point. We're at the 11th. We might as well just push all the way through to see if there's anything over here. Low, lower low, lower low, higher low, first higher low. Let's look back to my breach point is 85.25. Tick ratio, MacDaddy, they're going to buy it up. I mean, look at they're buying, and price is going to follow through. So this is your tell after you got in. If you entered here at 0550, oh, we went through this earlier. I think did we start here? They're all starting to look the same to me. All I care is that they're buying here. Not looking at price so much as looking at tape. High, higher high, lower high. My breach point is 97.25. Comes through. They sell it down. There's going to be follow through. Low, lower low, double bottom, higher low. Here's my breach point is 2097.75. Comes up to it, it breaches here, and then it follows through. Bit of a pullback, and you expect a pullback here. Whether you cash out or not, it's up to you, but the follow through wasn't here on order flow, and that's why we know we're going to retest or possibly fake out, breakout. But order flow goes sideways, and then they move it up. Right here, you see that? Lights it up again. Here, you have another indication that they're going to push it through. Low, lower low, lower low. Here's a higher low. Here's your breach point of 93.75, kind of buying. They move it up. Here's another breach point, and they move it up. It's all the same. It's just tape. What value of zigzag are you visualizing for the higher and lower? I'm just using pivots, just a low pivot or a high pivot, and then if it's high, higher, high, double. Nothing more exotic than that, Greg. Pretty boring stuff. We have some stuff that counts higher lows. I think that there's some stuff out there. You can get some bunch of indicators. We should probably build one that says like higher low, first higher low right on your chart so there's no confusion. If you don't have Sceeto, we're going to be going through some more stuff next week. Next week, we're going to be doing this puppy here again. It's going to be so cool. I'll try to get another person here and I'll go through it again because I really haven't pressure tested my language and make sure everything is accurate. So by next week, I'll have this cleaned up and then we'll do the universal levels model next week. How to manage the 4 different approaches for level, you know? Is it going to reverse at the level? Is it going to break out with acceleration? Is it going to break out, then retest? Or some people say test and retest, or the fake out, breakout. But I appreciate everybody's time at the end of the day. If you need help, you can go to support and just create a support request and you're off to the races. Somebody will get you. If you want to talk to somebody, hit the contact thing and I'd be happy to talk to you, whether you're an existing customer or a new customer or on a free trial or whatever it is. So thank you so much for your time again today. Please sign up for next week and we're going to drill down some more. And I thank everybody for their support and all the cool things we're doing here. Everybody have a wonderful day.
Sceeto's advanced algorithmic order flow data is now available within TradeStation, NinjaTrader, Multicharts, and Sierra Chart. For more information, please visit www.sceeto.com. This is Cuerva from Sceeto. Happy trading!